counterparty risk. It doesn't matter until it is all that matters. So, I'll preface this discussion by bringing up a question that often Bitcoiners think about. When would I sell? Well, I think the real question is, what would I sell for? I've expressed previously that I think valuing Bitcoin against fiat is to not really understand the value proposition of Bitcoin itself. If you understand where fiat currency and fractional reserve banking and an entire financial system built upon an empire of debt, when you understand the final destination of that vehicle, the logical outcome, the mathematical certainty of it, then you know valuing Bitcoin in dollars eventually is not going to make any sense. So that leaves us to value Bitcoin against other assets. And this is where I think it's much more interesting to ask, when would I trade Bitcoin for another asset at a certain exchange ratio? So for example, at what point would stocks against Bitcoin, at what point would stocks be so undervalued that I would consider trading some Bitcoin to get into stocks? At what point would the Bitcoin to real estate ratio, would that be so favorable that I would feel compelled to make that exchange? Notice I did not mention the Bitcoin to bond ratio or treasury ratio, and that's because bonds are denominated in dollars. They essentially are dollars that simply generate more dollars. To the extent that I would ever consider trading Bitcoin for bonds, well, it would be a bond market denominated in Bitcoin. And I think that's something that's coming, the Bitcoin bond market. But that's a topic for another video. But back to the topic of what would I trade Bitcoin for? It's a very interesting question because there could be some situations in the future where price to earning ratios for stocks are just bargain basement, pennies in the dollar, and perhaps it would be it would be tempting to make that trade. Now, we get into the topic of this video, counterparty risk. Here's the thing that would stop me from considering trading my Bitcoin, regardless of how favorable the trade would be, or how favorable the Bitcoin to financial asset ratio would be. As the present financial system stands, as it operates today, you do not really own or control your shares or your bonds or any of your securities. For example, when you hold stocks in your brokerage account, they are held in street name. And what this means is that your brokerage actually has the security is owned by the brokerage, and it's only the brokerage who keeps track on their own system who owns what. But when it comes to the actual security itself, it is the street name, it is the brokerage name that is on the security who actually owns it. And when you go further down the rabbit hole in this regard, it is most of the securities in the world are registered at the DTCC, the Depository Trust and Clearing Corporation. Now, I did just a little bit of research just to get some stats, and basically they custody millions of securities worth about $40 trillion, and they settle something like half a quadrillion in transactions a year. The DTCC is also a part of the U.S. Federal Reserve System, just as a side note. Now, this is all centralized on basically one ledger, if you want to put it that way. If you don't recognize the systemic risk that is involved in this type of system, if you don't recognize the risk of concentrating all the securities in the world essentially into one centralized record, into one centralized settlement and custody system, if you don't recognize the counterparty risk in a system like this, then you're not really paying attention. You're not really aware of the degree to which you do not control your paper securities. So what? Has this really been a problem in the past? We've had this system. The DTCC has been around for decades. They've apparently never, people have owned stocks for all this time. People have owned bonds. Have they really made any major mistakes? Well, here's the thing. Let's look at an event that happened last year. GameStop. What did we see happen with exchanges, brokerage companies like Robinhood and others? They changed the rules of the game. They told investors who were shorting GameStop that they could only sell their shares. They could not buy more. There are numerous reports of investors, retail investors, having their shares sold without their permission. If they are willing to take radical action like that, and they have not only the will to do it, but they apparently had the technical ability to implement this policy very easily. If they have that ability to do it just to stop investors, retail investors, from shorting a single stock, imagine the type of control that these elites, these powers that be, would be willing to exert in the time of a financial crisis, of the outbreak of a war. There's any number of emergencies, perhaps a cyber attack of some sort. If you don't control your assets, if you don't have custody of your securities, then really they are subject to the will and the whim of the government or whoever is able to apply pressure upon those who do control those securities. If they want to confiscate them because of a national emergency, they can, and they will. Keep in mind that the mechanism that they have been using for the past dozen years is the money printer. And that's how they patch over every problem. They just print money. Eventually, that is going to stop working. The money printer is going to break. Either inflation will break it, or the crisis will be such that they simply can't print their way out of it, and they need to confiscate real wealth. Guess what? There's a giant honeypot just waiting for them to stick their paws into. There is trillions of dollars in wealth stored in paper securities that investors have no direct control of, no custody of. If they want to impose a wealth tax and chop off 20% of everyone's stock holdings or bond holdings in order for whatever emergency, for whatever reason that is either invented or for whatever crisis happens to be unfolding. There's always an excuse for them to do so. There's always some good reason for them to explain why they are confiscating some of your wealth, or maybe all of it. Who knows? And there's nothing you can do about it because you don't control your securities or your bonds or any of your paper assets. You don't control it. There's nothing you can do. If you don't think that's a risk, if you don't think that given the present macroeconomic conditions, if you don't understand how the nature of the fiat currency system, the fractional reserve system, as it exists, if you don't understand the path that we're headed towards, then you're not really going to see counterparty risk as mattering at all. But when these situations arrive, counterparty risk is the only thing that matters. Return on capital doesn't matter. Return of capital is all that matters in these situations. If you don't think that there is a very concerted political will from both the top and the bottom of society that is pushing towards wealth tax or wealth redistribution, if you don't recognize this momentum, and all it will take is a crisis for some of these policies to be successfully enacted. If you don't recognize that, then yes, counterparty risk is not going to matter at all to you. What about real estate? Well, real estate, the thing is, it's very easy to tax. And the reason why it's easy to tax is because real estate is not, it's static, it's not mobile. You can't flee with real estate. Real estate cannot move, and therefore it is very easy to tax. And a tax on real estate, that's a form of confiscation. That's very easy to implement, depending on what kind of society or political situation you're in. You could just have outright confiscation. This has happened many times in history, more times than can be recounted. So real estate is not the answer too. Even though real estate is real, like it's a physical asset that is not held centrally, because it is of its very nature, it is not resistant to it is still subject to counterparty risk. And just as another example of from history, the Russian Revolution, 1917. What happened to the stock market? Stock market went to zero. It's not just that it crashed, it went to zero. All that wealth was confiscated. It went to zero. Chinese Communist Revolution. Stock market went to zero. Of course, bonds in these situations went to zero too. So you can see where I'm going here. Counterparty risk doesn't matter until it is all that matters. And if we go back to my original point when I opened this video, you asked me, what would I sell my Bitcoin for? Stocks, maybe, real estate. Well, guess what? I'm not selling for these assets. I'm not trade. It doesn't matter how favorable the value ratio between Bitcoin and some of these assets might become in certain situations. Because at the end of the day, I'm not going to surrender my sovereign and absolute control over the ultimate bearer asset of all time, which is Bitcoin. And a bearer asset, of course, like bearer bonds, are bonds that They belong to the person who holds them, to the person who holds the physical piece of paper that represents the bond. And they're not registered to any person. It's just whoever controls it owns it. Cash is a bearer asset. Cash is going away, obviously. They're phasing out cash. That's a bearer asset. But gold is a bearer asset. If you take delivery, if you personally hold it and store it, if you hold gold in a vault, in a centralized vault, well, you have counterparty risk. What is a gold vault but a honeypot for the government to go after if there's a convenient emergency to justify it, right? Of all these bearer assets, Bitcoin truly is the ultimate. It is a form of absolute sovereign control and custody over your wealth, of your asset. And I am not interested in the present financial system, and considering certain political trends that I recognize to be very, very disturbing and very much real in this world. I am not willing to trade that sovereign ownership, that sovereign control of my wealth for an asset that I have no control over, that I do not really own, that is subject to confiscation at any time. I'm not willing to make that trade. I'm going to hold on to my Bitcoin. I'm not going to sell it. I am not going to relinquish control over my life savings to a financial system that is a house of cards, a shell game. I am not going to trade in my sovereign control of my wealth for a paper promise that my wealth will be redeemable, that my wealth is mine. A paper promise issued by the very institutions that have long ago betrayed their promise to maintain the integrity of the monetary system. So, for the foreseeable future, I am just going to sit on my Bitcoin and wait. Because counterparty risk does not matter until it is the only thing that matters.